Thank you, Mr. Chairman, and I'm glad to be here in this spirit of bipartisanship, and I say that because I was struck by the very bipartisan tone of the ranking member's statement. For example, he was extremely critical of the Bush administration. I might not have anticipated that, but I say that because, as members will remember, it was in the fall of 2008 that we were summoned by Secretary Paulson and then Chairman Bernanke, two Bush appointees, and asked to do the TARP. And in fact, there was a bipartisan response to that. The gentleman from Alabama is very critical of the TARP. I think he's unfair to the Bush administration in that regard. But I do appreciate the bipartisan nature of his criticism. I would note he said, Secretary Geithner said they've made a profit on the loan to the banks, and he rebutted that with reference to the automobiles and the foreclosures. Well, that doesn't rebut the statement. He very carefully said it was from the banks. It is true we have not yet recovered the money from the automobiles. What we have instead is a thriving American automobile industry, GM and Chrysler, which I think would not have happened if we hadn't intervened. And I note that Ford, which was not seeking any of the funds, actively supported that for fear that if both General Motors and Chrysler had gone bankrupt and were not assisted, the supply chain would have disappeared. So at a time when we all talk about enhancing manufacturing in America, that was, I think, the single biggest thing that we did. Secondly, I would have to say, though, that the gentleman from Alabama's description of the legislative process doesn't cover what went on in the House. As for the Senate, I know there was some discussion between him and the senator from Tennessee, and I wasn't privy to them. But it certainly was not a case where the administration told us to go forward. On the Consumer Bureau, I was one of the ones who said no. The solution that he talked about, namely elevating the status bureaucratically of a consumer protection function within an entity that's primarily a bank regulator, wouldn't work. There's a qualitative difference between having an independent consumer regulator and having it as one of the things bank regulators do, because the history was clear that bank regulators didn't do it. In fact, interestingly, the largest single chunk of authority to protect consumers that existed before this law was passed was at the Federal Reserve. And when we questioned the Federal Reserve, they had very little to do with things. I would note again, by the way, I was struck when the Senator from Alabama talked about it, that he appeared to think that Mr. Geithner was more important in the Bush administration than any of the president's appointees. Yes, he was president of the Federal Reserve. He served under Ben Bernanke, who was the appointee of President Bush to be chairman of the Council of Economic Advisors and then of the Federal Reserve, and he worked with Secretary Paulson. So once again, I think if there's criticism, it goes to all of them. But to return to the Consumer Bureau, no, I do think it is important that it be independent, that it not be a second thought from the bank regulators, whether it was just one bank regulator or individual bank regulators. And I believe that would make a great deal of sense to give the consumer, the gentleman said, let's give them equal status. The only way you do that is to make them an equal entity, not subject to others. As to the bill itself, it had a common theme. One of the criticisms we heard was that the bill was too big. Well, I am sorry that we apparently exceeded the attention span of some members of the Congress, but I guess they could wait for the movie. Maybe it'll be coming forward. But the fact is that we are dealing with an interconnected system, and to have dealt piecemeal with an interconnected system would not have been a good idea. And there was a central theme there. The theme was this, that by sources of liquidity outside the banking system and by increased information technology, people in the financial industry had figured out a way to engage in lending while appearing to escape the burden of risk. And they appeared to be able to avoid risk themselves. Of course, risk didn't go away. It accumulated elsewhere in the system, and it exploded on all of us. So what we have done is to basically make people be responsible for that risk. And I would say here, one very important issue that's come up, and I differ with some of my friends on the liberal side here, is the question of risk retention. I would urge people to look at Michael Lewis's book, The Big Short. When people make loans and have no responsibility for whether or not they are repaid, they will not be as prudent. And that's a market incentive. The alternative that I've been told, and this is ironic by some of my friends in the banking industry, is, oh no, the regulators will be able to tell you what's a good loan and what isn't. No, we're on the market side here. I don't want to depend on the regulators to be able to look at all these loans. Yes, we have banned the worst kind of loans, but there's still going to be loans that could be made properly or not. And the choice is, do you rely solely on the discretion of the regulators to supervise all those loans, or do you build a market incentive in with risk retention? And I'm told, well, then we won't have the loans made. Well, if that's the case, I have a question. Because securitization, I went back, there was testimony by Lou Ranieri before this very committee in which he talked about securitization taking off. That was 1986. So I do have this question. If securitization without risk retention, which is not going to rival taxation without representation as a slogan for the ages, but securitization without risk retention, if that's necessary for there to be a housing market, what were people living in before 1986? Were there no loans made before 1986? This notion that people have got to be able to avoid risk is a great mistake. And I am for an exception for those loans that are very solid. But I think the notion that risk retention is somehow an impediment, it's a great mistake. The insurance industry, of course, and that's where we borrowed the concept, the insurance industry follows it. You cannot get reinsurance without some risk retention. And I think that some of my friends are falling into that trap once again. As to derivatives, the law does not mandate any requirement that affects people who are the users of the commodity in question. It gives full discretion to the regulators to make differences and to, in fact, focus on the kind of transactions that AIG engage in with other financial institutions, not with end users. And I would add to this, and there may be a debate on this, and it's one of the things I want to address here, and then if you want me to answer questions for a little while, I can do that. But one of the things we have done is to empower the CFTC, and if it gets the funding, then it would be able to do this, to deal with speculation. Now, there's a legitimate economic argument about whether or not speculation does, in fact, affect prices. And I think it is probably the case that 30 years ago, it may not have done so much. What's happened, however, in the interim is there's a greatly increased amount of liquidity and very great sophistication in information technology. As somebody pointed out, if you look at the charts, individual commodities used to move in different directions. It tends to be more of a uniform. Well, they used to move in the same direction. Now it's more individualized. There was a consensus now from Goldman Sachs, from Wilbur Ross, an investor, from people in the home heating oil business, from gasoline distributors, and from the facts that speculation does add something to the price of oil. One of the big issues here is this. Will the Commodities Futures Trading Commission be allowed to exercise the powers we have given it to put limits on people who are not end users, so that we are not trying to, what we're saying, if you're somebody who never goes near a barrel of oil, in fact, you're probably somebody who never goes near oil at all because you got somebody else to pump your gas for you. If you are, your chauffeur maybe, if you are in that category, we want to limit the amount you can buy because we see that we're told billions of dollars will be lost if they can't trade in the financial area. Well, where do those billions of dollars come from? They didn't come from the sky. They get added to the price. So those are two areas, whether or not we can deal with speculation and what we do about risk retention, where I intend to keep pressing. The further point I would make is this, and it has to do with the funding. I've talked to some business people, one of the leading business people in Boston in my office just last week. I understand people who think we have too much regulation, but I think the analog here is to the pharmaceutical industry, where the major pharmaceutical companies might not like some of what the FDA has, but they've worked to provide the FDA with enough money to carry it out. You might think that less regulation would be better, but clearly the worst of all worlds is to have regulations on the books and have regulatory authorities that aren't able to deal with them appropriately. They can't hire the right people and have the right information technology. So this nickel and diming the SEC and the CFTC, I think, does grave harm, and it's, of course, a catch-22 to complain that they aren't moving appropriately with the rules, but then deny them the funding to do it. And I have to say this, for people who are prepared to have America stay in Iraq for a couple more years, and I was encouraged when my colleague from Alabama talked about the military-industrial complex. Let's work on cutting them down, too, to help. But when people tell me they want to stay in Iraq over the Bush administration's decision to get out at a cost of billions and billions, but we can't find $150 million for the CFTC, I'm not impressed. And let's be clear with the SEC that that's an area where there's no taxpayer money. Finally, I do want to talk about Fannie Mae and Freddie Mac. I have to say here, let me be a little partisan. I am impressed with the on-again, off-again nature of this with my colleagues in the House. I don't here address the Senate. My Republican colleagues in the House talk very tough about Fannie Mae and Freddie Mac when they were in the minority. But when they are in the majority, something happens. They are affected by a strange kind of paralysis that comes with responsibility. I say that because last year, when we dealt with this bill in conference, the Republicans in the House offered the Henseling bill, a total abolition of Fannie Mae and Freddie Mac with no particular attention to its succession, as an amendment. We said no, we said it wasn't germane. We're now almost 7 months into this session with the Republicans in the majority. Mr. Henseling is a member of the majority. He's a subcommittee chairman. They haven't offered it. In fact, we had a discussion about some smaller bills to deal with this, which the Wall Street Journal said was a poor way to do it. And here's what Mr. Backus said. I speak for all members of all the subcommittee chairs. We would like a comprehensive bill. This is on Fannie Mae and Freddie Mac. Now, can we get a comprehensive bill? I don't know. I don't think so. So the Republicans in power in the House are much less certain. The gentleman from Alabama said, where are we? Well, I don't know. Ask your colleague from Alabama on the next plane ride home. And I will say this, somewhat embarrassed by this failure of memory once he became the majority, the gentleman from Alabama blamed the Obama administration. And this is really extraordinary, and I'll close with this. Of all the issues in all the world, I feel like Humphrey Bogart in Casablanca, in all the issues in all the world, when it comes to Fannie Mae and Freddie Mac, the Republicans in the House can't proceed without Obama. Why haven't we seen one? Because Obama won't let them do it. I suppose a more recent entertainment analogy is, for those who remember, Flip Wilson, in which the Republicans in the House are Geraldine, and Obama is the devil who won't let them do it. And the chairman said inaccurately, I am sure he misunderstood, that he was asked by the Obama administration to wait. I have checked with the Secretary of the Treasury, I've checked with HUD, I've checked with the administration. He misunderstood them. No one in the Obama administration is asking him to wait. And the notion that they can't proceed on Fannie and Freddie, that they have said may I to the Obama administration and they haven't gotten permission. I have a rule that I try to follow myself. I would advise this to my Republican colleagues here. No matter how tight the corner you're in because of problems, try to avoid saying something that no one will believe. It's not going to help you. The notion that they are not acting on Fannie and Freddie, the gentleman from New Jersey, Mr. Garrett, said that it's not a simple problem. That's why they can't act. So here's the deal. The Republicans in the House, here's why we're not acting on Fannie and Freddie. They have the Henseling bill, which is opposed by everybody who deals with the housing market, who want to get the private market back in, the realtors, the mortgage bankers, the Financial Services Roundtable, the American Bankers Association, the home builders, that collection of radicals, all disagree with the Henseling plan, all think you'll have to have a more comprehensive approach for what happens afterwards. But the Republicans have this problem in the House. Their ideology and reality are having a heck of a fight. And it's a draw right now. Ideologically, they are committed to the Henseling bill. But everybody who cares about housing says, don't do that. So Mr. Backus then says, okay, I can't do anything until the Obama administration lets me. That is not plausible. And I agree with the gentleman. I would say this, by the way. The only time since 1992 that the Congress has acted on Fannie Mae and Freddie Mac was in 2007 and 2008, when I was the chairman and Mr. Dodd was the chairman, and we got together a bill at the request of Secretary Paulson, which President Bush signed, which gave Secretary Paulson the authority to put Fannie and Freddie in a conservatorship, which he did. And while there were serious problems before, and we have to deal with this, in the current situation, I agree with Mr. Shelby, they have too much of the market, but at least it's not the kind of cost on us that it was before. Fannie and Freddie today are behaving in a much more responsible fashion because we gave them the power to do that, and I think that was bipartisan at the time of 2008, and Secretary Paulson acted on it. Mr. Chairman, I appreciate this opportunity.
Thank you again, Representative Frank, for coming over here today. I know you need to get back to the House. Senator Shelby has a couple.
I do feel at home here. I counted 9 of my former colleagues up here.
Yeah.
So I didn't feel entirely isolated. Oh, 10. Hello, Roger. Yeah.
Senator Shelby has a couple very quick.
A few observations. I know Congressman Frank and I have sparred over the years on different issues, agreed on some. I do agree with the Congressman Frank that there's a heck of a lot of difference between managing risk and speculation. Yeah. You know, and I think we all agree on that. And that speculation will cause people to get in trouble. Managing risk will help people, and we got to recognize the difference.
Agreed.
As far as Fannie Mae and Freddie Mac, the congressman knows when we were in control here, I was the chairman of this committee, we pushed hard for a reform of Fannie and Freddie. We got it out of the committee. We pushed it hard. We'll continue to do that. I don't know what's going on in the House. As he knows, it's been 25 years since I was there. But I can tell you, we hope, working with Chairman Johnson, sooner or later, the sooner the better, that we can do something comprehensive, something substantive dealing with Fannie and Freddie, because they continue to hemorrhage, yet we all recognize they're the only game in town right now as far as.
Could I say, Senator, I agree, first of all, two things. As you remember, and I remember that in 2005 and 6 when you had a bill, but as I remember, your major opponent at that point was my Republican chairman, Mr. Oxley, that he had a very different bill, and there was a dispute. Mr.
I
Oxley.
think he had a weaker bill.
Right. In fact, Mr. Oxley
You must
said.
have helped him with it.
No,
No.
the notion that
Okay.
actually Mr. DeLay was calling the shots in, and I want to deal with this.
Okay.
People have said, well, I was blocking it. I was in the minority. Tom DeLay was a major factor in the House, and if Tom DeLay was really susceptible to my suggestions, we wouldn't have gone to War in Iraq, and he wouldn't have gone on the dance show. I have to say that he was not someone who listened to me, but I hope we can move ahead on Fannie Mae and Freddie Mac. But I will say that was when the Republicans were in power, and there was an intercameral dispute. But we did work together in 2008. We had cooperation, and the only thing I would say to amend your statement is, I think we stopped the hemorrhaging. There's still a problem. It's still too much in the market. But if you look at the people that President Bush put in power and since, they will tell you that the problem that we are facing is losses incurred before it went into conservatorship. Since then, it's been run in a much more conservative and responsible fashion, but we still need to fix it.